which has an automatic approval process. The IRS realized, and on top of everything else, the next one says, no filing fee. All you have to do is put in that Form 3115 with the engineering-based study, and whatever depreciation you're allowed to goes against your taxes that year, 5 years ago, as far forward as you can use it. What's a 5-year example? Well, you know, there's something called sticks and bricks. Basically, real property is that property, or the floors and the roofs and what have you. And then there's the parts that you added to the building. There's moldings, for 7-year moldings, flooring, carpet, obviously. And this is where the Hospital Corporation of America took the IRS to the mat. They said, you can't tell us that this carpet is going to last 27.5 years. Or the specialized electrical that we put in for the hospital beds are going to last 39 years. They need to be depreciated, and we're entitled to that. And that's when the IRS finally had to break everything down into a book, which is used by us and by the CPAs to be able to capture that legitimately. 7-year example could be canopies and awnings, kitchen equipment, laundry equipment. We love people who own restaurants. We love people who own apartment buildings. Actually, we love anybody who owns anything, because we're able to go in there and save you a bunch of money. 15-year example, sidewalks, flagpole, you know, the new driveway that you put in for the fast food restaurant. Well, that's 15-year depreciation. You don't have to wait 27.5 years to get your money out of it. AICPA, the Bible for the CPA industry. Well, let's just say that we're good friends with CPAs. Apparently, some of them feel that we're in competition with them for the work that we do, which is not the case at all. A CPA's function is to take the information that he has at hand and apply it to the tax strategies of the client. What he needs to do to be safe is to make sure that if he's ever challenged in an IRS court, that he's got pretty good backup. And that's why going like this, or just going from files and records, doesn't cut it. Why don't they offer it on their own? Once again, it's the engineering aspect. I don't know too many CPAs who graduated as engineers, and I don't know any of them who've done 5,000 studies in the last several years. So we're looking for the expertise that each one brings to the table. Let's get rid of the risk. So we want to, if there are any CPAs out there, hi buddies, want to get to know you. Easiest 1, 2, 3. The first thing that happens is that someone who owns a building or has a CPA contact me says, okay, give me an idea of what I think I can save in my building. We give an estimate based on what modest amounts of information we get, and we give that to the CPA. The CPA looks at that, goes back to his client and says, well, here's $500,000, what do you think we ought to do with it? And that's where the strategy comes up. If the cost of the report is worthwhile compared to the amount of money that's returned, obviously it's a go-forward situation. It's a no-brainer. Of course, you do have to have a brain to begin with before it's a no-brainer, but it is a no-brainer. Next. Lots of stuff about reconciliation, that's between us and the CPA. Careful identification of all the property. If you're going to change 1250 to 1245, you better know what you're doing. Putting it all together spells money. And that's a word that means the world to me. What is the next one? Oh yes, would you trade a dime for a dollar? Many times it's much less than that, because even the report itself, and by the way, this is my firm or any firm that does engineering studies, it's a business expense that goes against your income tax. You get all the money that comes in, you expense out the cost of doing the study to begin with. Thank you, IRS, for being the bank for us. What's it all about? It's about the time value of money. Yes, you can indeed take 39 years to depreciate your property, but would you rather have that dollar 39 years from now or that dollar today? That's what this is all about. So, contact us for a no-cost review, Jerry Ashton, 212-982-2152. I also have a handout with me called the 10 Myths of Cost Segregation. It answers those immediate questions of, if it's so great, how come I haven't heard of it? My CPA has already done it. There's no value in it, etc., etc. My job is that of dispelling ignorance and spreading the light and the light. Thank you so much.
Great, thank you, Jerry. Jerry, if you could stand for a few minutes. Jerry, in case there are any questions,
Yes.
just raise your hand. In the back there?
Yeah, Jerry, in your slides, you referred to engineer study. What exactly is the engineering part of it?
The question was, what exactly is the engineering part of it in these studies?
There are two things of the engineering part. Number one, the engineer is brought in and takes pictures or has pictures taken of every part of the property, compares those pictures and because we can't be everywhere in the United States, we take those pictures and compare them to what it is that is claimed as a deduction or for depreciation purposes. So the engineer will go over the AIA, will go over the blueprints, and will go over all the studies that were, all the bills that were put in by the contractor. So working hand in hand, the engineer is the one who gives the blessing to yes, this is this rather than that. Does that answer your question?
Thank you.
Sorry, right here.
There are two reasons.
If you don't mind, I'm going to repeat the question because we're recording it.
Yeah, let me be sure I understand the question. Number one, is an engineer needed in case you're going to be doing major renovations such as plumbing and electrical?
Very identifiable.
Yeah, some of those are very identifiable. They don't need to be. Some are kind of tricky. And that's what the beauty behind what I do in representing this company is having the comfort of knowing that the people who've done these studies over 5,000 and never once been challenged by the IRS on any of the findings, that this is what works. Now, I can say that, you know, you're talking about going green and you're talking about putting buildings together properly. How you put a wall in can make a difference for cost segregation purposes if you do it one way or if you do it another way. That's about the best way that I can answer that with my limited knowledge.
Excellent. Question right here?
Question. Well, it's actually two parts. Let's say if I replace the property every 5 years, would I be able to get that appreciation of the property all in that year and then 5 years later?
Can you repeat? Just
Okay, the purpose of a cost segregation study, the immediate purpose is to capture what you're entitled to that you haven't taken advantage of. Whenever you add new things like new carpeting, your CPA is quite aware of what he needs to do to be able to appreciate that. So you don't have to do another study to take advantage of that.
My further question is, let's say we replace a roof today, but tomorrow, 5 years from now, I decide to go green and I want to do green.
So the question is if we're replacing a roof or a carpet.
If you're replacing a roof.
We choose to replace a roof today, and it's just a regular roof, and then tomorrow I need to replace that roof and upgrade it to be a green roof.
All renovations fall under the cost accelerate or cost appreciation acceleration as well. So something between 40 and 60% of what is done when you're reconstructing or refurbishing a building can actually be accelerated. There's a table and a chart for that. I am not sure that we would be needed to be called upon to do something as minor as that. Actually, the person selling you the green room will have all this information at hand. They know what they're doing. The people that are going green are getting very sharp at how to be able to set up a replacement of non-green and getting the tax advantage.
Okay, so right here. So what do you mean initially when about breaking up the property into pieces? What does that mean?
That's figuratively speaking. We don't take a crowbar to the place. What happens is we separate out the real property from the personal property. Personal property being those things like carpets, sidings, specialized electrical, all these things that our engineering firms understands to be personal property. That's what's accelerated. Now here's another interesting thing. Let's say that you sell the building and you do a 1031 exchange. You can take those savings along with you to the new purchase. And by the way, the person who buys your building can now have a cost segregation done on that purchase price. I want you to understand that the price of a building is not what it's worth, it's what you paid for it, less land. So if you paid $1 million for a building, you back out $200,000 for land, and you have $800,000. Out of $800,000, pretty close to $40,000 to $75,000 in immediate accelerated depreciation could be found.
Okay.